Good morning, everyone. I hope I'm audible. Please confirm with yes or no in the chat box. Please type yes or no in the chat box. Thank you all for joining this evening. We will begin shortly. We are waiting for some other participants. We'll start off by 10, 4, 5.
Yeah, a very good evening, everyone. I hope my voice is audible. I'm Siddharth. I'm also the moderator for today. Some of you have already commented on chat. Let's see if the rest of them are also able to hear. Can we have some quick confirmations on the chat, guys? Yes or no would be great. I hope we are all audible. And also if you're able to see our screen. Thank you. Yeah, okay. I think I see a few responses on the chat. Audience, just want to quickly check. So I'm sure, yeah. Good evening, Mr. Anand, Mr. Pawan, and Mr. Rishi. I see the names. Okay, so just want to quickly check while we are still waiting for some more of the audience to join in. Uh, as you're aware, of course, you have received the invitation and registered. I just want to understand what exactly are you expecting from today's session and what you would like to hear from our speaker today. Use the chat. You can also use the QA to put your thoughts. Let us see what your expectations are. So you can chat on the chat box freely. I will take a look at the inputs and we will also read them out. Thank you. Okay, I see a repeat audience, Mr. Indranil Saha. Good evening, sir. Okay, let me just read out his comment. Just to know in a nutshell what changes made him leave to lieu of GST return or any amendment made with notifications. Okay. I think the notifications will definitely be covered today as well. Any other expectations from today's session? Please feel free to use the chat. I'd also like to mention that, as usual, I'm sure some of you are repeat attendees here. We will have a dedicated Q&A session as well towards the end of the webinar. So please feel free to use the chat or the Q&A to drop your queries as the session goes forward. Thank you.
Good evening, everyone. My name is Kumar Sahu. I handle product marketing at Websol. I'll be your moderator for the day, along with Siddharth. Before we head into the webinar, I would like to give you a small introduction of our company that I represent. Websol is in fact a part of Wipro back in the days. We were in fact the inter-manufacturing division of Wipro, and we are specialized in .NET printer category. Over the years, the company decided to step forward out of the Wipro and form a separate entity itself in the name of Web Solutions. Our signature offering management services and was carried out over 2 decades, and with evolving needs and changing market trends, we decided to bring digital workplace solutions into our portfolio. With this, in addition, we expanded our product and service portfolios to carry mass markets. Over the years, we have also collaborated with market giants like Ricoh and Fujifilm. I would like to highlight a milestone in our journey. We underwent complete brand refresh and transformation by the name of Websol. We are coming up with 20 years of industry experience with over 500 plus enterprise customers. We are presented in over 2,000 plus service locations. In fact, we also awarded as Best VMS Solution Company of the Year in 2022. You can see few of our clients like Tata Capital, Wipro, Metro, and other clients. Now, the other moderator, Siddharth, will continue with the services that we are offering.
Thank you, Pawan. I hope my voice is audible and clear. Quick yes or no again, so that I can get going, guys. You can use the chat. Yeah, okay. Thank you. So what we're going to do is I'll run you through a quick short introduction about the products and the services that we have in hand. Now, as Pawan mentioned, we underwent a complete brand refresh. So that means it also gets carried over to our services. We are a managed services company, and hence our solutions are inclined to that. So let me quickly run you through what these offerings are. Our digital workplace portfolio goes by the name of FluidWorks. Under this, we have a gamut of offerings, which I will explain in the next slide. Pawan, can you move to the next slide? All right. So as you can see, what is Fluid Pro? This is our managed IT services solution. What we do here is we offer an array of services, be it IT infrastructure, cybersecurity solutions, remote monitoring and management. That entire gamut is taken care by us. Now, for example, if you are looking to deploy IT servers, your Wi-Fi access points, computers, keyboards, any sort of IT assets, that is completely taken care by us. We also have a 24/7 NOC center that is based in Bangalore. So this is Fluid Pro. Now moving to Fluid Print. As the name suggests, this is our managed print services solution. What we do here is we offer printers on a either CAPEX or OPEX model. Based on your requirement, we'll be able to deploy that, and we will simply charge you on a pay-per-print basis. We will not charge you for the printers. We will charge you for the service. So what this means is, based on a number of papers you print, be it monthly, quarterly, or annual, we will charge you for that. We are also number one in India on this part. Now, so far we have talked about IT assets and printers, correct? The most important thing is when you have this spread across your organization, across different locations, how do you manage this? This is done by our proprietary solution, that is FluidMap. We simply deploy a solution in your network, and this will take care of monitoring and also give you an eagle eyes view of all the assets spread across your organization. So things like uptime, downtime, your printer cartridge, toner levels, all that is taken care by FluidMap. We will also deploy a dedicated field service executive who will take care of your refillings and any sort of replacements there is. That's FluidMap. Moving to Fluid Trail, this is our process automation solution. We will be able to build simple to complex workflows based on your requirement, and to deploy on the go, we have ready to go use cases for HR team, procurement, finance, and sales and marketing as well. Things like employee records management, your records management, all of that is taken care by this solution. And lastly, I would like to quickly explain what FlowTax is. This is our managed GST automation solution, right from filing, reconciliation, e-invoicing, e-way bill, and all of this is taken care by FlowTax. We also have ready to go ERP integrations with APIs for most ERPs, that is Oracle, SAP, Microsoft Dynamics Navision, and other custom ERPs as well. We also are present on the retail end, but I will not explain that today. Let us move forward. Moving to the next slide. All right. So audience, we also have a very short demo towards the end of the session. So stay tuned for that. Now, without any further ado, let me introduce our speaker for the day. Some of you are already aware of who our speaker is. He has been our regular speaker. Now, a quick introduction about Mr. Akela Prakasa Rao. Mr. Akela is an independent indirect tax advocate. He graduated in 1989 from BITS Pilani in electrical and electronics engineering. He is also a gold medal holder who completed LLB from Andhra University. Mr. Akela is a certified fraud examiner as well, but currently not active. He's worked in CBIC from 1994 to 2008 and KPMG from the years 2008 to 2013. His other major stints were the Toyota Kirloskar Motor, Bidadi from 2013 to 2016, and lastly, Biocon from the years 2016 to 2021. He is also a member of indirect tax committees of various trade bodies, to name a few like BCCI, CII, FICCI, and so on. Aside being an active webinar speaker with us over the years, he's also written articles in TIOL, Tax Sutra, and various other tax forums addressing tax issues. He's a speaker and panelist as well on various forums. Mr. Akela comes with over 28 years of experience in the field of indirect taxes, with exposure in government consultancy and industries, to name a few like auto and pharma, from his experience. He comes with hands-on experience in GST, customs, FTP, SEC, to name a few. He's currently practicing as an indirect tax advocate, assisting clients on various aspects of indirect taxes, covering all levels. So if there's anyone who's looking forward to reaching out to him for any sort of tax concerns or tax solutions, services, please feel free to reach out. We will drop his contact email ID on our post-webinar mailer. It is an absolute pleasure to have you here with us on yet another webinar, sir. I am sure the audience is looking forward to directly hearing from you. Over to you, sir. Thank you.
Thanks, Siddharth, for those nice introductory words. And I'm surprised to see for the first ever time that the number of audience today are less. Could be because that everybody now got familiar with what are the changes that were announced during that 53rd GST Council meeting, or that everybody is busy on a holiday, so not able to make it. The timing, something to do with the timing, because normally we'll do this kind of sessions on a Thursday, but we planned it on a Wednesday. I do not know what calculation has gone wrong, but whatever it is, that let us go right with the recommendations of the 53rd GST Council. So the agenda for today will be, next slide, please. Siddharth, please turn to the next slide. Yeah, I'm going to cover the press release as such, and what are the changes that have come, that also that I'll be covering. And there are quite a number of circulars which they've issued, and what are the some missing points, and what is the way forward also before taking the Q&A. So that is going to be the agenda for today. Next slide, please. Yeah, so the press release says these points that I have not got anything on my own, but certain comments are there against each point in the press release, so that it will cover the entire thing for you. That is the reason I have reproduced the press release for your benefit. So the GST Council recommends waiving of interest and penalties for the demand notices issued under Section 73. Cases not involving fraud, suppression, or willful statement for the fiscal years 17, 18, 18, 19, and 19, 20. If the full tax demanded is paid up to 31/3/2025. So this is one ease of doing business, and to reduce the litigation, because the GSTAT is not yet constituted, though it is constituted, but it is not yet functional. Hence, the load on it will be more. Hence, what they have done, a partial kind of an amnesty scheme is what they have announced. So those who are ready to pay the tax, then interest and penalties get waived, and then you can get away with, provided that it is only a Section 73 demand. So that is only for the first initial 3 years period that they have announced it. So that is the first recommendation, but we are yet to see the relevant notification against this proposal. The GST Council recommends the time limit to avail the input tax credit with reference to any invoice or a debit note under Section 16(4) of the CGST Act through any GST or 3B return filed up to 30/11/2021 for the fiscal years 17, 18, 18, 19, 19, 20, and 2021. So one more year got added to this in the input tax credit when compared to the first point, that you can avail the input tax credit up to 30/11/2021. So you may be wondering that when we are discussing this issue in 2024, that why the amendment was made, that too that till 30/11/2021. That is because that if somebody has taken the ITC with a delay, then there are disputes which are happening. Now, with this amendment, I think all those disputes should be resolved. So, in that way, this amendment is going to help us. And similarly, the council recommended the monetary limit of 20 lakhs for the GST appellate tribunal, 1 crore for the high courts, and 2 crores for the Supreme Court for filing appeals by the department to reduce the litigation. As I told you in the first, while discussing the first point, that there is a tremendous thrust on reducing the litigation by the government. Hence, at least government being the litigant wants to reduce the number of cases that they are going to file. So, if there is an issue in which the demand is 20 lakhs, then definitely the demand, the revenue is going to write off such things, and they do not want to pursue the matter in case the SSC has won it at the lower levels. And this now it is the turn of the department that they have to go and file an appeal in the appellate tribunal. In all such cases, the department is now going ahead and settling the matter at that level itself. Similarly, they are not going to go to High Court for any cases which are where the demand is less than 1 crore, and the Supreme Court when the demand is less than 2 crores. Of course, that these particular recommendations have got certain conditions attached to it. So if you are interested, that one can refer to the relevant circular issued therein, which briefly I will be touching in the ensuing slides. I do not want to go into details because that we have to cover lot many points. So it is also recommended to reduce the quantum of pre-deposit required to be paid for filing appeals under the GST. So you know it that currently the appeal, when you want to file it, that there is a pre-deposit requirement. So that quantum of the pre-deposit, that they have reduced it by way of a notification, which we will be touching upon in the next slides. Similarly, that they have amended the provisions of the CGST Act to provide a 3-month period for filing appeals in the GST Appellate Tribunal, and it will start from a date to be notified by the government. This is a very good amendment the government has brought in, because earlier the law says that once the GST tribunal's president has been appointed, and when he takes charge from the day, within 3 months, all appeals are required to be filed. But unfortunately, only the president got appointed. But I don't know whether he is really functioning from any office and all as on date. But in all the states, the tribunals are yet to be constituted, members are to be nominated, and office infrastructure has to be provided. All these things are not likely to happen in this financial year for sure. So you can expect a tribunal functioning only in the financial year 25-26 as per my prediction. So they have now amended the law to say that appeals with the tribunal can be filed from a date to be notified for the government, and then they are from that date that they are going to give 3 months period, because this is entire appeal filing is going to be an online. So for which also there are some instructions which were recently issued in the last 10 days. So that also we can touch upon when if time permits. And to ease the interest burden on the taxpayers, GST Council recommends not to levy the interest under Section 50 in case of delayed filing of a return on the amount which is available in the electronic cash ledger on the due date of filing of the said return. There were disputes in the high courts wherein that the cash deposited in the electronic cash ledger and requires to be treated as the amount which is there with the government. Hence, if there is any kind of a demand, to the extent of the credit that is available in the ECL has to be reduced, and only on the balance the interest is to be computed. But the government has put up an argument saying that unless the 3B return is filed and the tax has been remitted towards the liability, that the government can never deem it as a money in their hands, and whatever is the deposits that are there in the electronic cash ledger or electronic credit ledger needs to be treated as a provisional receipts only, and they cannot be added to the consolidated fund of India in order to consider them as a tax revenue, is something which was debated in some of the decisions. Hence, now that they have amended the law in such a way that whatever is the amount that is available in the cash ledger also will be counted towards the tax liability, and it will be deducted out of your tax liability for computation of the interest portion, which is a good one in the interest of the SSEs. And then there is a very important sunset clause which has been introduced for the anti-profiteering provisions. Though initially promised that it is going to be there only for the initial period when the old tax regime is getting migrated into the new tax regime. So all the traders have to pass on the benefits to the end customer also. With that noble objective, the anti-profiteering provisions were introduced in the GST. But unfortunately, that there were some cases which were registered wherein that this kind of a passing on did not happen, and the anti-profiteering authorities have gone into the investigation and all that. But there should be a sunset date for it, because this particular anti-profiteering agency cannot function in that capacity for too long, because that otherwise that idle man's mind is devil's workshop, that they may come out with some new ways of investigating into the matters and all. So hence the government has thought it prudent that from 1st of April 2025, the anti-profiteering authority is no more going to be in existence. And all the litigations that are there with this anti-profiteering authority are going to be transferred to the GSTAT, which is going to be functional in the coming financial year. So all those cases will be dealt by the GSTAT in future. Next slide, please. And they have recommended exemption from the compensation cess leviable on imports in SEZ by the SEZ unit or developer for the authorized operations from 1st of July 2017. This is one other issue, contentious issue which was there, that when SEZ is importing, then compensation cess is not exempted. So that there were some issues around it, some litigation still pending. Now with this, I think that litigation should not be there, that they can be settled. Similarly, there is a reduction in the tax rate in respect of milk cans of made of any materials and irrespective of their use also, and for carton boxes, and for both corrugated and non-corrugated paper and paperboard, solar cookers, whether single dual energy sources, and sprinklers, fire water sprinklers, etc. So the relevant notifications are 2 of 24 dated 12/7/24, which is effective from 15th. So some of these notifications are also given as a cross reference over here, and they have given exemption from certain services, particularly rendered by the Indian Railways to the common man, like a sale of platform tickets, offering the retiring rooms, and the charges collected for the cloakrooms, and the charges collected for the battery operated car services, and also in case of intra-zonal railway supplies, all those were exempted. Initially, the railways were under the reverse charge, but on the request of the railways that it was converted into the forward charge. Now the railways have expressed their inability even to meet that kind of a compliance. Now they were completely exempted. So that's how this particular recommendation has come into the place. And then the GST Council recommended to roll out the biometric based Aadhaar authentication of registration of the applicants on pan-India basis in a phased manner. So already experiments were conducted in AP, Gujarat, and in some other states, and they have seen reasonably good success in eradicating these bogus registrations and all. Hence, this is going to be, there is going to be a pan-India rollout for it. And the Rule 84A, second proviso, was added wide notification 12 of 24 to enable this mechanism. Next slide, please. So there are rate changes. There is a uniform 5% IGST for the parts, components, and testing equipment, tools, toolkits of aircraft, irrespective of their HSN classification, to provide fillip to the MRO activities subject to specified conditions. This is a sector-specific rate rationalization which they have provided for the MRO activities. All milk cans, now that they are going to attract 12%, and GST rate on the carton boxes has been reduced from 18 to 12. Solar cookers will have all kinds of, whether single or dual use, are going to be attracting 12% of the GST. And poultry keeping machinery and all will be at 12% GST. And sprinklers also is going to be 12%. And IGST exemption on imports of specified items for the defense forces is about to lapse on 30th of June 2024. So it has been further extended by another 5 years. So this exemption is going to be in place for another 5 years till 30th June 2029. And to extend the IGST exemption on imports of specific research equipment and boys imported under the research mode array for African, Asian, Australian monsoon analysis and prediction. So these are all sector-specific exemptions which were extended by the government. And to this compensation cess that I have already discussed. So next slide, please. Kindly bear with me that there will be some repetitions in the points also at some times. So the to exempt the compensation cess on supply of aerated beverages and the energy drinks to authorized customers by the unit-run canteens under the Ministry of Defence, and to provide ad hoc IGST exemption on imports of technical documentation for AK-203 rifle kits imported for Indian Defence Forces. These are all defence related, so not for the common people. Next slide, please. So there is some rate rationalization which was there even in the services sector. So some of them are to exempt the services provided by the Indian Railways to the general public, sale of platform tickets, facility of retiring rooms or waiting rooms, cloakroom services, battery operated car services, and also to exempt the intra-railway transactions. The issue for the past period will be regularized from 2010-23 to date, to the date of issue of this exemption notification, which has already been issued, and to exempt the GST on services provided by the special purpose vehicles of Indian Railways by way of allowing Indian Railways to use infrastructure built and owned by SPV during the concession period and maintenance services supplied by the Indian Railways to the SPV. So this is also catering to the railways only, and to create a separate entry in notification 12 of 2007 under the heading 9963 to exempt the accommodation services having a value of supply of accommodation up to 20,000 per month per person, subject to the condition that the accommodation services is supposed to be for a minimum continuous period of 90 days, and to extend similar benefit for the past cases also. But however, this notification which was issued is now effective from 15th July 2024, and this is going to be a very beneficial amendment which was made in the interest of all those who are living in this kind of rented accommodations under the PGs and all that. Similarly, for the insurance sector, that there were some fillps which were given like a co-insurance premium apportioned by the lead insurer to the co-insurers for supply of the insurance service has been exempted by declaring it as a no supply. And the past cases are also going to be regularized as is where is basis. Next slide, please.
So before we go to the next slide, I'd like to launch a poll, sir.
You go to the next slide because that relevant things will cover it so that the context will remain.
Okay, sir.
After that, I'll tell you that you can launch the poll. Yeah, the transaction of ceding commission, reinsurance commission between the insurers and reinsurers is also going to be declared as a no supply. And then GST liability on the reinsurance services of the specified insurance schemes covering life insurance is also going to be amended. And then where the total premium covered is paid by the government under certain schemes is also going to be notified for exemption, and all past cases that they are going to settle it. And similarly, the statutory collections made by the real estate regulatory authority are going to be exempted, and they have issued a clarification on further sharing of the incentives under the UPI. So these are all the things that they have amended. So we will touch upon the balance issues also after the poll. So you can go for the poll, please.
Yes, sir. Participants, I'd like to launch a poll. Now you can be able to see this poll on screen. What is the monetary limit for filing appeals by department in the Supreme Court as recommended by GST Council? 1 crore, 2 crore, 5 crore, 10 crores.
Active participation is requested from all the people because that we just wanted to know whether you are hooked on to this presentation or that you have simply switched on the presentation and you are interested in your own work, so that attention can be drawn to this. At the same time, it is a sharing of our knowledge. Nobody is going to give you scores for all this and all, so you need not worry.
Thank you, participants. We receive different answers. I'd like to end the poll, and also participants, if anyone is having any questions or queries, you can type in the chat box. We will take up in the Q&A section. Sir, you can proceed with the next slide, sir.
Yeah, the next slide. So some of the facilitation measures for the trade. like insertion of the 128A in the CGST Act to provide for the conditional waiver of the interest and penalty, which we have discussed already. So the section amendment is what is needed. Why we are touching upon this same issue once again is that what you have to keep it in mind is these amendments in the sections are going to be notified as part of the budget exercise by the central government, and the respective states are also supposed to amend their SGST acts also as and when it is feasible at their end. Then only the amendment will be fruitful and can be implemented in that particular state. So always you need to keep it in mind that unilaterally a central government or one state government cannot do any changes in the GST law or the procedures. They are to be discussed in the GST Council, though the Supreme Court has held it very clearly that the GST Council's recommendations are not binding on either the central or the state governments, but nevertheless, that everybody had ceded their taxing powers under the GST, and then they wanted to run the GST administration with consensus. So far, in 53 GST Council meetings, not even one single point was put to vote. So the so far the administration is able to grapple with all these issues by building consensus. So let us hope that the same thing will continue. So the point here is that all those amendments, the sections are going to be now taken up on 23rd July 2024 when the finance minister is going to present her budget in the parliament for approval by the parliament, so that the CGST Act gets amended. Later, the states are also proactively have to amend their respective SGST acts. So, reduction of the government litigation, which we have already discussed, an amendment in section 107 and 112 for reducing the amount of pre-deposit. So, currently, that the GST Council recommends to reduce the amount of pre-deposit for filing the appeals under the GST to ease the cash flow and working capital blockage for the taxpayers. And the maximum amount for filing the appeal with the appellate authority has been reduced from 25 crores to 20 crores respectively under the CGST and SGST. Further, an amount of pre-deposit for filing appeals with the appellate tribunal has been reduced from 20% with a maximum amount of 50 crores CGST and 50 crores SGST to 10% with a maximum of 20 crores each under CGST and SGST. So the worst case scenario, the pre-deposit can be going up to a total of 40 crores, not beyond. Next slide, please. Yeah, applicability of this extra neutral alcohol is a contentious issue in the Supreme Court. A 9-member judge bench is taking up this case, and whether this alcohol used in the industry has to be taxed by the state government or by the central governments. So this issue still is pending. The final decision is not yet out. After the these summer holidays, the Supreme Court has started functioning, and CJI is occupied with these orders only. So anytime in the coming days that we can expect this larger bench decision on this matter. But however, GST has taken a conscious call that the extra neutral alcohol there is going to be out of the GST purview. And similarly, reduction in the rate of TCS to be collected by the e-com operators. This is also a welcome measurement. So from 0.5% that they have reduced it, but from 1%, they have reduced it to 0.5% of these tax collected at source, because filing the returns and getting it back is going to be a huge task for the e-com operators, and their working capital is getting blocked because of this collections by them. So, but this is one good measure by the government for the e-com operators. Similarly, timelines for filing the GST appellate tribunals that we have discussed, and the rules, the relevant rules from 110 to 113 were suitably amended. So, how to file an appeal, how to file a cross objection, and what are the fee details for filing an appeal with the GSTAT, everything has been explained in 12 of 24 notification, and you can refer to for all the details and all that in that. And it is going to be a complete e-filing, so no need of any preparing papers and submitting it and all. And a change in the date for filing the returns in Form GSTR4 for the composition tax players has been extended from 30th April to 30th of June from this financial year onwards, which is going to give additional time for all those under the composition levy. Next slide, please. Yeah, there are some relaxations in the conditions of 16.4 that the credit taking period for the past years is going to be 30th 11/2021, considering the litigations that are already pending at several forums. And with respect to the cases where returns have been filed after revocation, they have conditionally to relax the provisions of 16.4 in cases where returns for the period from the date of cancellation of the registration till the date of revocation are filed by the registered person within 30 days from the order of revocation. So when the GST registration has been revoked and again restored, if the returns that are to be filed between these two periods are filed within 1 month of such a revocation, then the 16.4 ITC credit is going to be restored to them, which is going to be industry-friendly amendment. Similarly, 88B of CGST rules has been amended in order to abate the amount that is available in the ECL. So that is also a welcome measure only. And insertion of 11A for granting powers not to recover duties not levied or short levied as a result of general practice under the GST Act. This is one other important change that the normal people may not be able to really appreciate what this change can bring in. But now, so far, while drafting the GST law, the lawmakers have forgot to include such a provision in the Act. Which was there in the erstwhile central excise and service tax laws also. But now that they have introduced it, so by way of these powers under this particular section, that the government can allow regularization of non-levy or short levy the GST when the tax paid, short paid or not paid due to the common trade practices can be. This particular amendment is going to help in a large way to the insurance sector. And then for the online gaming sector also, once the Supreme Court decision is out. So let us see how effectively this is going to be put to use in the coming days. Next slide, please. Yeah. So there is one more demand that when you export any goods or services on payment of IGST under the claim of rebate, sometimes it so happens that the price of the exported product is revised upwardly at a later date. So in such a case, what is happening is because that for the original price that you have paid the IGST, so when the price has been enhanced post revision, that you are supposed to pay the IGST, but since already the refund for such an IGST is filed by you, for the same period, a second refund claim cannot be filed in the system. That's how the GST refund system has been designed. In such a scenario, the SECs are finding it difficult to get this additional IGST paid as a rebate. So, in order to address their concern, now the law has been amended and the portal has also been amended suitably to claim that additional IGST paid on revision, upward revision of the prices of the goods or services exported. Similarly, a clarification regarding valuation of supply of import of services by a related person where recipient is eligible to full input tax credit has been issued. But unfortunately, the section 28 has already got a provision. But by taking up this particular issue and wanted to, in their eagerness to clarify the matter, I think this particular instruction has created more confusion in the SSEs. So if anybody has got an issue around it, maybe that we can take it up for a detailed discussion on this. But now that I am not going into the details of it. And clarification regarding availability of the ITC on the ducts and manholes used in the network of optical fiber cables is also been a contentious issue. Previously, in the central exchange regime also, when the capital goods are installed outside the factory premises, because the factory premises is a registered premises, when any capital goods are installed outside the factory premises, there used to be a debate that whether the input credit should be allowed or not. So a similar debate has arisen in the case of this optical fiber network operators also, and on two fronts. One, that it is away from the registered premises is one, and the second thing is whether it is resulting in a removable property, thereby under section 17(5), whether we have to we should not be taking the credit. So now the council has clarified this matter, that ITC should not be restricted on the ducts and manholes, because these can be removed and they can be moved to another place. So they should not be treated as part of a movable property. So they are deeming it as a movable property and the credit is being allowed. And clarification on the place of supply applicable to the custodial services provided by the bank also, a clarification has been issued. So this can be debated only if there are any banking customers over here. Otherwise, I do not want to trouble any of you. So I think that some of these things that we have covered, now it is time for launching another poll by the WebSolve team. Over to you.
Yeah. So audience, I would request all of you to quickly take a look at your chat. We're just going to launch a poll. Now, this is a live poll that is running on a LinkedIn profile. So I request all of you to click on the LinkedIn link that you're seeing on your chat, and this should take you to your LinkedIn profile. Let me just read out the question for you. For those of you who are not able to see it, which amendment was proposed related to the composition scheme for small businesses in the 53rd GST Council meeting? I'll just read out the four options that we have. First one is GSTR for filing time extension, eligibility criteria removal, additional tax benefits, and imposition of higher penalty rates. I request all of you to take about a minute or two to quickly answer this, and we can get back to our presentation. Audience, on a side note, this is our official LinkedIn page. So those of you who would like to see more of GST related content, regular updates, blogs, feel free to follow us, and you will be able to see more of our content in the coming days. Thank you. And just take a quick look at how many votes we have. Okay. Or 6 votes, not many. All right. So, audience, once you're done, you can come back to the Zoom screen and we will get.
Can we move on to the next slide?
Yeah, over to you, sir.
Yeah. So another contentious circular that we received while seeking clarification on the valuation of the corporate guarantee. This has become contentious for the reason that when the receiving party is in a position to avail the full credit of it, whatever is declared is recognized as an open market value is what was provided under the law. But when such a clarification is there, that why to rock the still waters and create a problem, we are unable to understand that when a 1% value has been proposed as accessible value for the corporate guarantee, that too in cases when the loan has not yet been disbursed, but the corporate guarantee for this loan has been given, but the loan is going to be disbursed over a period of time also, that they say that on the entire amount that you have to consider 1% as the assessable value for discharging the GST liability. So this is going to be a controversial circular for sure. And in the coming days, we may have to see some kind of jurisprudence around it. Maybe the courts have to settle the matter in the coming days. One other welcome change that was proposed in respect of RCM is the council recommends to clarify that in cases of supplies received from unregistered suppliers, where tax has to be paid by the recipient under the reverse charge mechanism and invoice is to be issued by the recipient only, the relevant financial year for calculation of the time limit for availment of the ITC is going to be the financial year in which the invoice has been issued by the recipient. So this is a very, very important and favorable amendment in the law. So a lot of controversies around RCM can be addressed by this amendment. So it says that even if the service has been rendered in 2020, but the invoice comes in 2024, then RCM can be paid only in 2024, and there is no need of any interest applicable in such a scenario. So that one needs to keep it in mind while dealing with any issues of RCM. Next slide, please. Yeah, clarification is also provided on this reimbursement of securities and shares as ESOP, ESPP, RSUs by the companies to the employees, and clarification on requirement of reversal of ITC on the amount of premium in life insurance, which is not included in the tax value, has been clarified. And then there are clarifications around the taxability of reckoned salvage values in the motor insurance claim, and extended warranty and warranties provided by the manufacturers to the end customers also has been clarified. There's a famous Supreme Court decision on this matter, Muhammad Ikram. And later, Tata Motors has also litigated this matter. So considering all those amendments, that these clarifications were issued now. And the clarification regarding the availability of the ITC on the repair expenses incurred by the insurance companies in the case of reimbursement model of settlement of the motor vehicle claims has also been given. And taxability of loans granted between related persons was also provided. And then there is a clarification on the annuity payments under the HAM projects, and time of supply in respect of allotment of spectrum to the telecom companies has also been given, because these are all high value amounts, but these amendments are only in respect of those specified sectors only, not for everyone. Hence, I am not going to the detailed discussions of what exactly is the problem and what is the solution that they have provided. Just to bring your attention to the kind of issues that the GST Council was occupied during the 53rd Council, only for a half a day, that I am just bringing it to your notice. And clarification in relation to the place of supply of goods supplied to unregistered persons where the delivery address is different from the billing address. This is another controversial clarification, I will say. So you may have to wait for in the days to come to get a clarity on this particular issue, because what they are saying that bill to party is different and ship to party is different. In such a scenario, what is going to be the place of supply? Ideally, when it is a bill to ship to kind of a transaction, if it goes with the biller's address, then what happens that the credit flow will be smoother. But unfortunately, in the case of supplies made to the unregistered persons, that they have clarified that the place where that the physical supply of the goods is happening. So this may create some kind of a controversy in the coming days. So let us wait and watch, and maybe that we'll touch upon this issue in our ensuing webinars in the future. And then there is a clarification on the mechanism for providing evidence by the suppliers for compliance with the conditions of 15(3)(b)(2) of the CGST Act in the post-sale discounts, to the effect that ITC has been reversed by the recipient on the said amounts. This is one other CA certificate is prescribed under this, that whenever the post-sale discounts are affected and the GST is adjusted, in all such cases, the government is again asking the chartered accountants to certify such transactions. Unfortunate piece of it, because it adds to the workload on the people. So clarifications on the various issues pertaining to the special procedure for manufacture of specified commodities like pan masala, tobacco, and also has been given. Next slide, please. Yeah. So 147 section has been amended retrospectively to provide for the transitional credit in respect of the invoices pertaining to the services provided before the appointed date, that is 1/7/2017, and where the invoices were received by the ISD before the appointed date. So there were some court matters which are pending in various courts. So in order to address those litigations, that this particular amendment has been given. And one more return now. Somebody had told that in this webinar that I just wanted to know what are the new returns that were prescribed and how to go about it. So if you are interested in it, then maybe you can refer to 12 of 2024 for all related legal amendments. And then there is a detailed procedure that what this GSTR 1A consists of and how to file it. So how the GSTR 1 for the sales return filed by you can be amended by using this GSTR 1A procedure. So the detailed instructions are included. And then the council recommends filing of the annual returns 9 and 9A are exempted for all those taxpayers whose aggregate annual turnover is up to 2 crores, which is a welcome change. And amendment was also recommended in section 122 1B with retrospective effect from 1/10/23 to clarify that penal provisions are applicable only for those e-commerce operators who are required to collect the tax TCS under this and not for other e-commerce operators. And similarly, Rule 142 and the issuance of a circular to prescribe the mechanism for adjustment of the amount paid in respect of a demand through DRC 03 against the amount to be paid as a pre-deposit for filing an appeal. It is an elaborate procedure. Many steps are there in it. So one can refer to the relevant instructions. Next slide, please. And rolling out of the biometric based Aadhaar authentication, which we have discussed already. And then a new section 74A was introduced to provide for a common time limit for issuance of the demand notice and other, irrespective of whether the cases involve fraud, suppression, willful misstatement. Currently, 3 years is the period, and this period has been extended from time to time, citing that there is a problem and all that. So there were some litigations which were there in the high courts, and some of the high courts have decided the matter in favor of the revenue for allowing such extension by the revenue. But the other matters are still pending. But however, the law now has been amended in order to provide for a common timeline. So this decision is yet to be notified as on date. And then amendment in section 171 and 109 has also been provided to provide for the sunset clause for the anti-profiteering, which is going to be 1st of April 2025, which is also a welcome change. Next slide, please. Yeah, and there is an amendment in section 16 to curtail the refund of IGST in the case where export duty is payable. So the council recommends that the refund in respect of goods which are subject to export duty is restricted, irrespective of whether said goods are exported without payment of taxes or with payment of taxes. And such restrictions should also be applicable if such goods are supplied to a SEJ developer or a unit for authorized operations. So there is a controversy that whether such a restriction for refund is applicable only in the case of physical exports or even for the deemed exports when supplies are made to the SEZ units or developers for their authorized operations. Now, this controversy has been set at rest by this amendment. And the threshold limit for reporting the B2C interstate supplies invoice-wise in Table 5 of the GSTR 1 was recommended to be reduced from 2.5 to 1 lakh, which is going to be a burden again. This is where that the ASP, GSP come into the play, that if you use the automation systems which are available in the market for filing your returns, then life will be easy. Otherwise, this is a humongous workload on the tax practitioners that now you are supposed to report all the B2C transactions above 1 lakh in Table 5 of GSTR 1. So be careful about it. Try to automate and digitize your systems as early as possible. And the council has recommended that return in form GSTR 7 is to be filed by the registered persons who are required to deduct the tax at source, TDS, to be filed every month, irrespective of whether any tax has been deducted during that said month or not. Even a nil return also is what they are suggesting. And some of the decisions which are not there in the press release, but the decisions were made and the instructions were given are like Rule 39 dealing with ISD has been amended from a date to be notified later. So I think in the last month that we have conducted a webinar on the ISD mechanism and whether ISD is a suitable mechanism or that we should go for a cross charge. But now a detailed instructions were issued by notification 12 of 24. However, the effective date for implementation of these decisions were not yet notified. Hence, from a date to be notified later, the entire ISD mechanism is up for a change. So maybe that if time permits, we will cover the ISD once again in the future. And Rule 138 was amended with effect from a date to be notified for generation of the e-way bill by the unregistered persons also. Now, e-way bill is getting generated only by the registered persons, but now there is a mandate even for the unregistered persons also to generate the e-way bill. So, this particular change also is going to be implemented at a future date. So they have to notify that. And similarly, that detailed provisions are for how a CSD, Canteen Supply Department of the Defense, can apply for 50% GST refund of the taxes paid by them in procurement of the goods which are sold in such canteens has been given with elaborate procedures and all that. And it has also been clarified that supply of agricultural farm produce in packages or commodities containing quantity of more than 25 kgs or 26 liters shall not be considered as a supply made within the scope of expression pre-packaged and labeled commodity. There is a news item which you might have seen that the government is now changing the legal metrology act and the procedures also in line with those changes, even under the GST also, that they have made a change. That is the reason in supermarkets nowadays that you don't see a rice bag of 25 kgs. You normally see a rice bag of 26 kgs or 30 kgs because in order to beat the GST and the prepackaged commodity rules and compliances thereof. So that is what is the relation between these things. So the next slide, please. I think we have covered all the items in the press release, but how these press release statements have taken shape, some of the notifications I have given as a cross reference and then I have suggested, I have explained them also. Now, sorry that there is a typo error in the circulars, the top, kindly bear with me, but the various circulars that were issued till date that I am just touching upon, I am not going into the details only when somebody is interested in discussing, maybe at in the Q&A session, I'll be taking up because I need to cover all these areas in this short time that is available. So the circular 207 is about the reduction in the government litigation, where I told you that 20 lakhs limit is for GSTAT, 1 crore for High Court, 2 crores for Supreme Court. Similarly, 208 is a clarification on various issues pertaining to the special procedure for the manufacturers of the Pan Masala tobacco, not of much relevance for majority of the attendees here. And 209 is about the place of supply of goods to unregistered person in cases involving supply of goods to an unregistered person where the address of delivery of goods recorded on the invoice is different from the billing address of the said unregistered person on the invoice. The place of supply of goods shall be the address of the delivery of goods recorded on the invoice. Where billing address and delivery address are different, supplier may record the delivery address as the address of the recipient on the invoices for the purpose of determination of place of supply of the said supply of the goods. Briefly, that I have touched upon, that what can be the potential issues in this and what can be the controversy in future. So once the matter settles down, maybe that we have to revisit this issue. And circular 210 is talking about the valuation of supply of import of services by a related person. So this is also going to be a controversial clarification. Next slide, please. 211 talks about the time limit of 16.4 for RCM payments. This elaborately that we have discussed. So it is going to be the financial year in which the invoice gets generated. And circular 212 is the evidence of compliances for 15.3b2, wherein that post-sale discounts and other things, where that they are prescribing now that they are prescribing the CA or CMS certification for evidencing the post-sale discount adjustment in your GST. So the next slide, please. 213 is about the taxability of ESOPs and RSUs provided by the companies. So the details are there for you. And 214 is about the LIC, the life insurance premiums and other things. So it is pertaining to the insurance sector. Next slide, please. I'm rushing through this because this particular presentation is going to be shared by the WebSol team with all of you. So at your leisure that you can go through, because some of the participants I could see that suddenly, I do not know, on a holiday that they are getting urgent calls and other things and they are exiting the session. Hence, I do not want to trouble the others with elaborate explanation on this unless somebody is really interested in it. Circular 215 talks about the taxability of the salvage and wreck, which was there in the press release also. Next slide, please. Yeah, 216 talks about the ITC availability in cases of warranty and extended warranty. Next slide, please. 217 is about the, again, insurance sector on the expenses incurred for repair of motor vehicles under different modes of insurance. Next slide, please. Yeah, 218 is about the transactions of loans between related parties and the taxability thereon. And 223 is an amendment in Circular 1 for in respect of proper officer for provisions of the registration and the composition levy. And 224 delineates the guidelines for recovery of outstanding dues. And when the first appeal has been disposed of, till the appellate tribunal comes into the operation. 225 talks about the taxability and valuation of supply of services in providing the corporate guarantee between the related parties. This is going to be a controversial circular. And then 226 is going to be the mechanism for the additional IGST paid on upward revision of the prices of the exports. 227 is about the processing of the refund applications filed by the canteen stores department in the defense. Next slide, please. So what is that the government has missed the opportunity in the 53rd GST Council meeting? First, it is on the time because it was scheduled on a day, but the first half, the finance minister has taken views from the industry and from the revenue because that several ministers from all the state governments have participated in the deliberation, and there were some states which elected the new representatives. Hence, there were new members who have attended the GST Council as a result of it. Hence, she was collecting their views for the ensuing budget. Hence, the first half was spent during in that. So only in the second half, they were able to deliberate on some issues. And this is what that we have got. So far, whatever we have discussed, so many amendments, so many circulars, so many notifications, so many changes in law and the procedure, which were notified from time to time. So what are the missed opportunities? That there was a big hue and cry in the fertilizer sector that the central government is giving subsidy to the fertilizer manufacturers when they are offering their produce to the farmers in the form of direct benefit transfer. But unfortunately, the direct benefit transfer, though it is called a DBT, but it is being routed through the manufacturers when they are selling it to the farmers, because that the accountability and other factors are were considered while structuring the scheme. So in such a scenario, when the central government subsidy is coming as a post-sale discount to the manufacturing sector, so some of the state governments are denying this particular abatement, and then they are levying the GST, they are demanding GST on the subsidy given by the government. Similarly, some of the states have also resorted to asking for the prorated ITC of the turnover of the subsidy while giving the refund for the inverted duty. Similarly, when the imported fertilizers are being sold to the farmers, at that time also, there is an inverted duty because all the fertilizers are sold at a subsidized rate. So when they are being sold at a subsidized rate, that it results in an inverted duty refund. Of course, there were controversies that when the same commodity is being sold, that whether the inverted duty refund is applicable or not. But the court judgments were there which have clarified that point. However, still the fertilizer sector is reeling under these litigations. So in the 50th GST Council meeting, the law committee has approved a draft clarification in the form of a circular, but the same could not be issued as it has been referred to the group of ministers. So now the government is seriously thinking that whether the fertilizer rate can be brought down to 5%. If such is the case, then what will be the implications on the other issues is what is under study by the rate committee. Once the rate committee decisions are there, maybe that we can expect that the 50th GST Council, whatever the circular that was prepared, that may see the light of the day. So we have to wait. So that was a very important opportunity which was missed. And second thing is subsuming of the petroleum products in the GST. Of course, on a positive note, that there was a dialogue which has happened during the 53rd council deliberations. However, that we are yet to see that action in this regard. And several sectors like telecom, insurance, online gaming are awaiting for the clarity on the demands issued against them. I think most of the clarifications given in the 53rd GST Council meeting are able to help these sectors in alleviating their pain. But certainly the Section 11A amendment is also going to come to their rescue. And there are some pending decisions from the apex court in respect of the ITC availment on the fixed assets, safari retreats case, taxability of the industrial alcohol in the case of state of UP versus Lalta Prasad, and a mining royalty in the case of Mineral Area Development Authority versus Steel Authority of India, etc. So these are all large bench decisions consisting of 9 members and all that in the Supreme Court. So once the clarity is available, then I think maybe that we will get more visibility on these issues, and we will be able to in a position to discuss this again in the future webinars. Next slide, please.
Sir, we'll launch a poll, sir.
Yes. How many polls you have? Only one left?
This is the last one, sir. Yes.
Yeah, go ahead.
Hello, participants. I'm quickly launching a poll. You can see this poll on screen. Under circular number 2104/2024, if a foreign affiliate provides services related to domestic entity eligible for full input tax credit, what is the deemed value of such services? Open market value, declared value on invoice, nil value, discounted value. Please answer your answers in the poll box.
I think for the first ever time, Websol has given a question for the poll wherein there are multiple answers also.
Yes, sir. Also, participants, I want to let you know if anyone having any queries or questions, you can type in the chat box or the Q&A section. We will take up all the questions in the end of the webinar. The poll will be closed in another 5 seconds. Please enter your answers in the poll box. Okay, sir, over to you, sir. So you can continue with the next slide. Sir, if you are speaking, you are on mute, sir.
Oh, unfortunately. So sorry. So what I will repeat what I said while I'm on mute. So on the poll question, that the value declared on the invoice or nil value is also going to be acceptable. So it's going to be a controversial topic. Let us see how it opens up in the future. So regarding the way forward, the decisions made which need amendment in the GST Act and rules will be presented during the central budget, now to be presented on 23rd July. So that is what that we have already discussed with that. And the next GST Council meeting is scheduled in the month of August, post the budget presentation, wherein the unfinished agenda of the 53rd Council meeting will be taken up. And several other proposed recommendations are yet to be finalized and notified, and they may happen in the due course of time. So we got to wait and see. So that brings the end of my presentation. Maybe that I had to rush through the whole amendments and all that. So now that there will be a small demo by Flotax team on their product. So go through it. But in the meanwhile, on the topics and on your day-to-day issues, that if you have got any kind of questions, please post your queries in the Q&A box, which we will be taking up after the demo by Flotax. Over to you, sir.
Hello, participants. We have a short demo on one of our offering called Flotex. We have another panelist, Miss Sangeeta, who will be taking care of the demo and walk you through the demo. Over to you, Sangeeta.
Hello, everyone. I'm just showcasing our Flotax product here. This is the one platform where we are giving all three services at a time, the GST services and e-invoice services and e-bill services. I'm just logging here our credential where we are getting from our company, so just to showcase our product features. This is our platform. I'm just explain our features one by one. This is the dashboard. Mainly here you can see our whether your GST is one filed or not, 3B is filed or not. Whether we all know about while doing filing that OTP authentication is required. Whether OTP is authenticated or not, that all features you can see here. And detailed dashboard also same thing, whether particular month, particular return is filed or not, that you can see in detailed dashboard. And the next one is master management. You have a multiple PAN that you can add here in one registration. If you have multiple GST and PAN India voice registration, that also you can add here, multiple GSTs. User management, if you want to give any specific work and to a specific person, that you can under user management, you can create host creation and user registration. You can unblock and unblock that particular user. That all you can do here under user management. If you want to store your customer details and supplier details, that you can store here. If you want to add HSN details, that also you can add under add HSN features. And we are giving the services like under manual services also available, and CSV upload services also available, and we are giving our APIs. If you want to integrate our APIs into the ERP, whatever you are using, the SAP, Oracle, Navision, from that also you can generate. Here under e-invoice generation option is completely manual generation kind of thing. If you want to generate manually, you can use these features, how to sales and purchase, all things that under invoice generation. And data upload is nothing but is related to GST related thing. If your document is less than 5 KB, that you can use a CSV API upload. If your document is more than its limit, you can use the CSV bulk upload. And GST validation option is also we are giving, whether GST is valid or not, that you can see here. After once you have uploaded all the details, then you need to come GST uploads. There you can save all the whatever loaded, that you can save the data here in GST upload. After that, if you want to download any kinds of report that GSTR 1, 2B, 2A, 3B, and GST receipts, all reports you can able to download it here, and you can
So
see
it
the
is a pan India
track.
level download. Like all together, you can able to download the files from our system. So if suppose if you have integrated to your ERP system also, like we have an option like all India pan level wise, you can able to download. Like it is a 18 months Excel option. You can able to download the reports from the system. Then we have a feature called reconciliation also. Like it is totally deals with the GSTR 2 and 2A and 2 and 2B and 6 and 6A. Like it is a completely deals with the reconciliation. And you have a supplier trigger option also, where you can send the multiple mails to your customers. Like whether if suppose ITCs needs to be there, like you can if there is any mismatch related in your books of accounts with the government data, you can send the mails to your customers. So this is a completely detailed reconciliation, which is a feature which is available in our platform. So then next we are coming to the e-waybill. E-waybill, like we have two different solutions. Like one which is related with the e-invoice along with e-waybill, and we have a standalone e-waybill, where earlier if e-invoice has been not implemented, earlier there is a e-waybill has been provided by the government. So like we have a detailed dashboard under that, where you can able to find out what are the number of e-waybills which has been generated, and if any cancelled e-waybill has been generated, and if it is rejected by you or any counterparty also, we can able to view the status here. And then we have a generate option, generate e-waybill. Like here we have a three different options, as already Sangeeta has been informed you. Like we have a manual generation process as well as a CSV upload, and we have a complete automation integration. Like whenever we are coming to the e-invoice e-waybill, it is a complete automation. There is no manual intervention. If suppose if you have your own ERP where you can integrate the APIs in your system. So this is a e-waybill related thing. And if you want to cancel the e-waybill also, you can able to cancel through through our platform also, as also there is an APIs also which has been provided by the government. And so then next coming to the e-invoice related thing. Here also we have a detailed dashboard related to the e-invoice, like on a daily basis how many e-invoices has been generated, and if you have cancelled within 24 hours, if e-bills has been e-invoice has been cancelled, it will be shown. And here like we have given an option, like if suppose on any data discrepancy, like if any data mismatch is there, if suppose if you have not generated, that also will be shown here. And according to that, if you any e-invoice has been processed with error also, those records are also available under the error records. So here there is a bifurcation given under the GSTN wise and the pan level wise. What is the count of that, if you can able to view under the e-invoice summary details. The next we have a bulk upload option, like where you can upload the CSV template and also API integration, where as I already told you, like it is a complete automation integration related to e-invoice and e-waybill. And there we have an option like for canceling IRN also. And here whenever if suppose if you have opted for our platform, if suppose if your ERP is down, and you can able to upload the data from our system, according to that you can download multiple invoices from our system, like IRN view and print, where you can download multiple PDFs at a time. On a day wise you can able to download. Then that's it. Then we have a multiple reports under this also, like you can able to download like supplier wise report and MIS report, we can able to download. So this is all of our simple and easy user friendly project which we can able to use. So that this is all about our product.
Thank you, Sangeeta and Divya, for the short
Thank you.
and very detailed demo of FlowTax. Audience, I want to launch a question. If anyone is interested in having the complete demo according to your requirement, you can click on the yes or no in the poll box, so that our team can contact you and reach out to you for the very detailed explanation on the demo and we can tailor the demo according to your requirements. Okay, thank you, participants. I want to end this poll and we can proceed to the Q&A section.
Yeah. Coming to the chat box queries, whatever that they are posed over here, that I'm just going through them. We paid the interest. One Mr. Gajendra had asked that we paid the interest with respect to the GST demand based on the scrutiny audit by the GST department for 1920 and 1819. Can we get the refund? I'm afraid, sir, whatever cases it is, these are all amendments which are made on as is where is basis. Hence, if something is already settled, I doubt that you will be able to get any kind of a refund. I received an assessment order for 17, 18, 18, 19 for Sunday credits more than 180 days payment. I made the payment along with interest. Is it possible to get the refund? Same answer applies to you also here. And I've received an assessment order for 17, 18, same question. So, not possible, sir, that you will not get the refund of it. And it is related to the IGST and the ITC and import of goods. So, customs authorities will delay, but how to take the credit is his question. So, see, you can take the credit based on the bill of entry copy. But the only thing is that the automated system and the analytics which the revenue department uses will generate a reconciliation and then they will ask you the question. So, if you are in a position to explain, then definitely because your credit is correct as per the law, that since you have got a bill of entry, you have made the payment, transmission from the customs to the GST department is got delayed. That is the reason that they are not able to see. But the credit taken by you is correct. Hence, you can go ahead, sir. But the only thing that you need to explain this as and when the department raises the question. Co-insurance notified. Yes, they have defined what is co-insurance. So you can go through it, and if there is any discussion, then we can definitely do that. For accommodation services obtained by the corporate, see the paying guest accommodation services which are exempted up to 20,000 per month per person, provided 90 days. All this is applicable only for the students and the employees only, but not for the corporates. That corporates when take any houses and all for accommodating their own employees and all, and this is not going to be useful. So I don't think that this can be taken advantage, Mr. Suresh. So that is what is the tech. And we have paid the interest in respect of GST demand. This I have already answered it already to you. And Anil's another question, invoice is GST invoice, are their accounts to be filed? Point number 28. I am unable to get this. What is this point number 28? Anil, if you are there, that we can discuss that. Otherwise, that I don't see any questions over here. Jaydeep has raised his hand. So Anil and Jaydeep can be muted so that I can take their questions and directly answer to them.
Audience, if anyone wants to talk directly and ask any questions, you can raise the hands so that I can enable you to talk directly. I'm enabling Mr. Jaydeep Gaur to talk. Jaydeep, you can unmute yourself and you can talk.
Mr. Jaydeep?
I'm audible.
Yes, yes, very much.
Thank you very much, and good afternoon, all of you. Actually, my query related to ITC admissibility on canteen services.
Okay.
I'm having canteen, and we are providing canteen services to our employee, third-party associate as well as permanent associate.
Okay.
So, is ITC admissible on both?
So there was an earlier webinar on the HR related expenses given by me. So kindly refer to that because it is a controversial topic wherein that there are multiple conditions which you need to satisfy in order to avail the input tax credit, because the revenue is under the impression that whatever is the food that is consumed in the canteen is for the personal and it has got nothing, no nexus with the business. Hence that they have denied it. However, that there are some settled decisions also. So we need to evaluate all that, the entire procurement process, and then how you are running the canteen, whether it is the food is cooked by your own employees who are deployed as a cooks and servers over there, or that you are getting a third-party service provider. Then if the third-party service provider is there, whether the employee is paying or that the corporate is paying, or it is going to be a joint responsibility of both the parties, and how the recovery mechanism is there. Is there any kind of a recoveries from the employee? Whether all these things are codified into the appointment letter which is issued to the employee, and whether your factory, whether your organization is notified as a factory under the Factories Act. So all such things, unless we examine that, we will not be in a position to give you an answer to your question, sir. Hence, we need to refer to these all these parameters, and then we can conclude on it. So if you want any kind of a detailed discussion on it, we can connect offline, and then we can discuss that.
Okay, sir. Okay. Thank you, sir.
Thank you.
Mr. Jaydeep, we also send sir's email contact in the post webinar mail. You can contact directly with the sir for your query. And Mr. Anil, I'm unable to make. Mr. Anil D, you can speak now.
Hello.
Yeah,
Yes,
Anil, go ahead.
this is regarding GSTR 7.
Yeah.
When the recipient is to file each and every entry-wise details for filing GSTR 7. So it is like for GST invoice or accounting entries, they have to file it.
It is for each invoice, sir, because this is a
Invoice
TDS, no?
means, yeah, invoice means
You cannot
accounting
cumulatively
entries.
put the numbers over there.
No, invoice means accounting entries is a
Yes,
invoice,
yes.
or a bunch of accounting entries led to one GST invoice. Like so, what is to be filed by them? Like it is GST each and every entry, right?
Yes.
Okay, sir. Thank you.
That's why I said that the earlier that you go for digitization and take the help of ASP, GSPs, your work gets reduced. Otherwise, that it is going to be a tedious process of filing these returns in the GST. It is not an easy task.
Okay, sir. Thank you.
Yes. Mr. Keshav wanted to ask some question.
Hello.
Yeah,
Mr.
go ahead,
Keshav, you
sir.
can talk. Yes.
Yeah, very good afternoon. Actually, my query is related to ITC on flight invoices, means air freight invoices. It's related to.
Sir, what is your query?
We book flight when flight service provider generate invoices in the name of company.
Right.
So can we claim ITC on that services? It's for for employee traveling, but it's related to business.
Certainly, sir.
Business
Certainly.
travel.
I understood your question. See, I'll tell you, it is quite a cumbersome exercise to get the ITC on the flight tickets.
Yes.
So the ASP GSP providers are having an API wherein that this particular tax component gets captured, and the reconciliations will happen in the back end, and then you will get a clean picture. And this credit is something which is allowed when it is incurred in or in relation to your business trips.
Okay.
You can take it.
Okay. Thank you.
And audience, if anyone wants to directly ask any questions with the sir, you can raise your hands, or else we can wrap it up with the webinar. Also, I want to mention, after the webinar, you will be receiving a post-webinar mail with the presentation deck and the contact of Akela sir, so that if you have any queries or any queries related to GST or any finance related queries, you can email to the sir. And the webinar is recording, so that you can find it on the YouTube as well. We'll provide the link in the post webinar.
Since I'm not seeing any kind of a questions or anything, because the people
Yes,
are
sir.
slowly exiting, hence I deem it that it comes to an end today. And thanks for your time, those who have stayed back till the end. And thanks for this session from the WebSol also. Thank you.
Thank you, sir. Thank you, audience, for joining the webinar. Thank you, sir.